Welcome to The Explainer. Today, we are diving deep into the AI boom. We're talking about trillions of dollars pouring into this space. Fortunes are expected to be made. But the source material we're looking at today asks a really provocative question.
Look, there's no doubt that AI is a world-changing technology. But history shows us something pretty fascinating. Not all world-changing technologies actually create a bunch of new fortunes. So to really get a handle on AI's financial future, we gotta look back at two other revolutions that had completely different outcomes.
So what our source material breaks down is that these huge tech revolutions, they tend to follow one of two paths. One path basically meant a whole new generation of billionaires. The other, well, it spreads its value so far and so wide that almost nobody gets rich from building the tech itself.
And you can see these two paths perfectly with the microprocessor, which, created thousands of fortunes, and shipping containerization, which completely changed global trade forever, but made its pioneers surprisingly little money. Figuring out which of these two AI looks like, well, that's the key to the whole thing.
Okay, so let's jump into path number one, the wealth creator. And this whole story, it doesn't start with some grand vision of the future. Nope. It starts with a humble little component for building calculators.
Just think about this for a second. The PC revolution was a really slow burn. It took a full decade for the establishment to take it seriously. And here's the absolute kicker. Its real potential was a complete and total surprise, even to the very people who invented the core technology.
So all of this created the absolute perfect storm for startups. Because the whole thing was such a surprise, the big guys, the incumbents like IBM, they just saw a toy, not a threat. And that gave a whole generation of founders the breathing room they needed to tinker, to build, and in the end, to capture an insane amount of value.
And this quote just nails it, right? It perfectly explains why a whole new class of entrepreneurs and investors got rich. The establishment completely whiffed on it. All the value from the PC wave was captured by the outsiders, the ones who saw what the insiders just couldn't.
All right, so now let's flip the script and look at our second path. This is how a totally different kind of revolution played out, about 15 years before the microprocessor. And this one was anything but a surprise.
This was the exact opposite of the PC's slow burn. The benefit of putting goods in a standard box, it was just obvious. The second Malcolm McLean proved it worked, everyone piled in. It turned into a competitive frenzy, from day one. And here's what happens when everyone rushes in at once. You get brutal price wars. Profits just get squeezed to nothing. And on top of that, it was incredibly expensive. We're talking billions for new ships and ports. The value just didn't stick with the shipping companies.
So where did all that money, all that value go? It went downstream. The real winners weren't the innovators who built the container ships. They were the customers. Companies like IKEA and Walmart who used that super cheap shipping to build their own global empires.
Okay, so now we have our framework. We've got the surprise-driven PC revolution versus the obvious super competitive containerization revolution. So here's the billion-dollar, or maybe trillion-dollar question. Which path is AI on?
Let's just apply our models here. Is AI some unexpected thing that caught all the big companies off guard, letting scrappy startups build a defensible moat? Or is it something whose potential is so glaringly obvious that the biggest companies on Earth are immediately throwing all of their resources at it?
When you lay it all out side by side, it's kind of hard to ignore the parallels. AI isn't some surprise that came out of a garage. Its potential is obvious, which is exactly why every tech giant is already in a fierce competition. And, just like building giant ships and ports, it is unbelievably expensive.
And what that really means is the rules of the PC gold rush, they just don't apply here. The playbook that made people fortunes back in the 80s and 90s, betting on the scrappy, disruptive innovator, that's probably the wrong playbook for an obvious late-wave technology like AI.
Okay, so if the companies building the core AI models are unlikely to deliver those massive venture-style returns for new investors, what does that mean for everybody else? Where's the real opportunity?
And let's be super clear, the economic value that's going to be created here is immense. People are predicting up to $7 trillion added to the global economy. The pie is going to be absolutely enormous.
But for anyone who's actually trying to build a business or make an investment, that's not the important part. The real question is, who gets to keep a slice of that pie? As all those trillions of dollars flow through the economy, where does the value actually end up sticking?
The source argues that betting directly on the AI value chain itself is pretty much a trap. The companies building the models, they face insane competition and costs. The app companies, they're always at risk of being wiped out by the next model update. And the upstream guys, like the chip makers, their stocks are already priced for perfection.
The real opportunity is to look downstream, right? Just like Walmart and IKEA became absolute giants by using containerization to reinvent retail, the big winners of the AI era will probably be the companies that use AI to fundamentally reinvent their own industries with low-cost, high-volume models for knowledge work.
So the value is going to flow to existing businesses that apply AI to slash their costs and make their services better. It's going to flow to new entrepreneurs who build, say, the IKEA of legal services or the Walmart of financial advice. And ultimately, the biggest winner of all is probably going to be us, the consumer. We're going to get access to cheaper and better knowledge-based services than ever before.
And that leaves us with a really powerful final thought. The entire investment playbook we've been using for decades might have to flip. For 50 years, the smartest bet was on the new technology itself. But in a revolution like this one, the real fortune might not be in building the tool, but in being the most clever at using it. The only question left is, who's that going to be?